On January 27, 2021, hedge funds around Wall Street began to panic. Their shorts, essentially a bet that a stock will go down by a certain date, which according to all quantitative data ought to have been a safe investment as they were targeting the almost bankrupt video game company GameStop, began to lose billions of dollars within the span of an afternoon. At the point of writing this script, the collective damage amounted to well over $20 billion, and that number is going up by the minute. For context, that's more than the GDP of Afghanistan. They blamed everyone. At one point, a Wall Street financier even went on television and suggested it might be because of the interference of an enemy nation.
I don't have subpoena power and I can't really go out and look at it. I could argue, I don't even know if there are foreign powers at work here behind the scenes trying to make chaos of our markets.
Perhaps that's quite telling, as it shows the sheer power behind the move. But no, there was no shadowy government cabal behind this. Instead, on a forum by the name of Reddit, there was a sub-forum called r/WallStreetBets.
GameStop, if you don't know, it's a video game store, and like a lot of businesses, they've been struggling because of COVID, but also because most people buy games online now. And yet, despite a sharp decline in sales, over the past 6 months, their stock price has grown by 8,000%, because a bunch of amateur investors, maybe even some Russian disruptors who are part of a Reddit community called WallStreetBets, decided to buy a bunch of GameStop stock.
It is here that a group of anonymous people with no further connection to each other decided to short squeeze GameStop. In plain English, the hedge funds were betting that the price would be going down by a certain date, and this was also further adding downwards pressure on the stock. Worth mentioning, though, is that there were 138 short positions for each actual stock, meaning that it was impossible to meet all positions with the available stock volume, and hedge funds would have to buy stocks at hilariously elevated prices to meet their legal obligations. This fact was then bandied about on r/Wall Street a few days prior, and it began to give momentum to the GameStop stock. Every dollar that the stock went up meant millions of dollars in potential losses for the hedge fund and profit for the people participating in this decentralized pump and dump short squeeze. Eventually, it moved past this short-term play and began to be a quasi-rebellion of the status quo. People didn't care about the stock's fundamentals. They cared more for the meme value and the fact that by owning the stock, they were implicitly hurting Wall Street. Of course, institutional investors are not happy about this fact. They've used every trick in the book to get them to stop. They've initially called them bigots, racists, and anything between. When that didn't work, they then went to more direct methods, which we'll get to in a bit. In this video, we'll be exploring the story so far, why this happened, and how this event has the potential to change political movements forever. Why this happened now. The main reason a bunch of plebs were able to pose a real threat to Wall Street is that the proportion of retail investors, as in normal everyday people with money in the stock market, has grown. Back in the day, you needed to buy stocks via brick and mortar brokers that might have a minimal capital requirement and charge you per transaction. As such, for most people, this is a world that was utterly inaccessible. This changed in recent times with the advent of zero-fee trading platforms. This meant that your everyday Joe with $10 to spare was able to participate in the same markets as multi-billion hedge funds at no transaction cost. But how did apps make a previously expensive activity, quote-unquote, free? The way in which they provide the service for free is quite ingenious, as they sell the buy-sell order list. Imagine it's an instruction list of who wants to buy or sell at what prices, to high-frequency trading firms that operate super-fast computers that buy and sell stocks almost instantly. Then, this high-frequency trading company organizes this order list to be able to make a bit of money. The zero-trading fee platforms are thus monetizing their users behind their backs. To the end user, they are more or less getting the stock at the market price, barring a decimal point or two. So it looks like there are no additional costs per transaction. Now, this type of zero trading fee platform like Robinhood or Webull have begun to attract a growing audience, especially during the pandemic where people are locked in their houses for months on end with little else to do. Just to put it into context, in 2019, retail investors were only 10% of the market, while in 2020 they came to represent 25%, and that percentage is arguably growing by the day. In other words, while before, Wall Street could operate under the expectation that market participants were people like them, speculators, yes, but ones who had the same framework of the world and level of sophistication. Now, this is no longer the case, and it's driving them insane. Game theory only works if other participants are aware of game theory as a concept and can identify such scenarios. To quote, "We can remain retarded for longer than they can remain solvent," unquote. A reference to the famous quote by Keynes, the godfather of modern economics, that said, quote, "Markets can stay irrational longer than you can stay solvent," unquote. As such, the presence of the plebs is throwing a wrench into the whole system. Models break once you introduce the inherent randomness of the plebs. For example, how could you ever rationally predict that a random post on a website would trigger a cascade effect that at the time of writing has a non-zero chance of collapsing the financial system by its sheer size and contagion ability? Unsurprisingly, insiders are beginning to take a more active role in rearranging the game to benefit the elites. Robinhood, one such trading platform, for example, recently received a class action lawsuit because they had forbidden the purchase of GameStop stock. Subsequently, they started blocking a host of other stock, including AMC, BlackBerry, and Nokia, as this Reddit pump and dump short squeeze effect, for want of a better term, accidentally started spreading to them as well once GameStop was blocked. Not only that, but there's evidence to suggest they were also selling off users' GameStop stocks without their permission. This was all supposedly to protect the users from market instability. It's absolute nonsense, as they actively allow users to take on leverage and play with dangerous financial instruments on a day-to-day basis.
Everybody is to leave here immediately. This cafe is closed until further notice. Clear the room at once.
How can you close me up? On what ground?
I'm shocked to find that gambling is going on in here.
You're winning, sir.
Oh, thank you very much. Everybody out at once.
But the difference is that they're not harming hedge funds or bankers for that matter. They're just making them richer. Either way, as things now stand as of the 30th of January 2021, Robinhood got scared by the class action lawsuit and the expense of lawyers, so they've allowed for the limited purchase of these stocks. But the question still stands, why would Robinhood screw over their user base? I must caveat, for legal reasons, that the following is my interpretation of events and may be entirely wrong. This is allegedly what happened, as I interpret the publicly available information, and in no way represents an indictment with any legal weight. Now, with that out of the way, I'll say that Robinhood has had a habit of having, quote, technical glitches at very convenient times. If I were more conspiratorially minded, I'd suggest that they were doing it on purpose. In other words, they would act as a circuit breaker for big finance when the plebs get a bit too uppity. And then, going back to the high-frequency trading companies that account for 40 to 60% of Robinhood's income, I'd point to the fact that Citadel, one of the companies indirectly shorting GameStop through Melvin Capital Management, have a long-standing, profitable relation with Robinhood, meaning that for a few days, they would have accidentally been paying Robinhood millions of dollars for the privilege of Robinhood users fucking them in the ass. This obviously wouldn't make them particularly happy, and they'd quickly argue against it. But surely that's pure fantasy and baseless speculation, right? Why it's not gonna stop? In the first few days of the short squeeze, it was self-destructive, but ultimately rational economic decision. However, now it has evolved to be a rebellion against the status quo. Imagine, for the last year, people have been locked in their houses, the small businesses in their community have died, and they might have also lost their jobs. Then, the government gives them a stimulus check amounting to $600, and top government officials call this a significant amount.
We also have in the legislation direct payments, which were not in the Republican bill, to America's working families. I would like them been bigger, but they are significant, and they will be going out soon.
Meanwhile, while people are rotting in their homes, suffering from debilitating mental illnesses, rising spousal abuse, alcoholism, joblessness, they start hearing that billionaires are richer than ever and that the stock market is doing superbly. Naturally, this does not sit well with them. So when someone comes up with a means of using those $600 to screw over the system, a lot of people take it. Worth mentioning that the average holding in a Robinhood account are between $1,000 to $5,000, and more than half of Robinhood users hold GameStop. As a final ingredient in the recipe, I'll mention that nearly 70% of Americans have less than $1,000 in savings. Put all this information together and you have an interesting potential sequence of events wherein users essentially weaponized the $600 stimulus checks and they use it as a fuck you to Wall Street. I don't know about the veracity of any specific stories, but I've heard a lot of people voicing that they're throwing a bit of money into the pot, not because they expect any profit out of it, but because they think that Wall Street deserves a lesson. As a completely unscientific sample size, when I broke down the potential ways in which this phenomenon could cause an economic crisis on Twitter, the overwhelming response was that this was a good thing. And I don't have a particularly anti-capitalist community. On the contrary, it is my impression that they tend to be quite centrist in a lot of things, as I don't majorly favor one side over another. Perhaps the post I've seen that best encapsulates this whole situation is a post on WallStreetBets.
I remember when the housing collapse sent a torpedo through my family. My father's concrete company collapsed almost overnight. My father lost his home, my uncle lost his home. I remember my brother helping my father count pocket change on our kitchen table. That was all the money he had left in the world. While this was happening in my home, I saw hedge funders literally drinking champagne as they looked down on the Occupy Wall Street protesters. I'll never forget that. My father never recovered from that blow. He fell deeper and deeper into alcoholism and exists now as a shell of his former self, waiting for death. This is all the money I have, and I'd rather lose it all than give them what they need to destroy me. Taking money from me doesn't hurt me because I don't value it at all. I'll burn it all down just to spite them.
In other words, this has evolved past just being some idiots online with harebrained schemes to get rich. People may not understand how the situation works, but they understand that if the GameStop stock line goes up, the billionaires cry. Now, I hate to ruin the fun, but it's not quite so simple. Firstly, high-frequency trading companies, unaffiliated with the GameStop short, have definitely made money in this market volatility. In other words, every time you buy and sell, you're helping a billionaire somewhere get a tiny bit richer as they arbitrage your trade orders. Secondly, there are rumors in the market that on the day Robinhood froze purchases of GameStop with the result of reducing the price, hedge funds took this lull in the action to purchase short sales for the future, meaning that there are financial institutions now that have short selling instruments tied to the unsustainably high prices, so they will probably earn money when it eventually goes down. However, regardless of whether this Reddit short squeeze ultimately ends up working or not, it is irrelevant. As much as when gunpowder was first used in a battle, were the people that first used it the winners or not? That much has been lost to history, but what wasn't lost to history were the novel techniques. The toothpaste is out of the tubes. The plebs now know that they have enough power to cause real damage if they concentrate their financial resources on specific points of failure. In less than a week, some random shitposters on Reddit have caused more to damage capitalism than every single communist since the Vietnam War. Forget about Wall Street and other such fairy tale nonsense. Singing Kumbaya in front of some bankers is hardly gonna change opinions or legal protocols. What will be a better agent for change is showing how fragile and lopsided our system is by pressing on these pressure points. Like a martial arts expert that destroys a much more powerful foe through quick and pointed strikes, so too can activists affect real change. I'm not for or against this new political tool, much as I'm not for or against the concept of voting or castling in chess. These are tactics that have an effect, and each time they're used, they're different. Sometimes they're valid and useful, and others I abhor them. What the future will bring. I'm not a prophet, nor do I have any money to make from being right or wrong, but here are my educated guesses going forward. Firstly, this is the first of many such short squeezes and other types of mob financial justice that we haven't even thought of. Regulators will try to restrict this in one form or another. Market manipulators might even be branded as domestic terrorists, but this will only start pushing people into more independent and less regulated platforms. There, in what is collectively known as decentralized finance, people will begin to find a home where they can trade freely. At the moment, it's not user-friendly and there are technical considerations to overcome. But out there, in the periphery, there is a revolution brewing where even if they create capital requirements to invest in the stock markets, users will be able to sidestep this with all manner of complex solutions like dark pools or synthetic assets. Through these parallel systems, prices would still be indirectly affected by the plebs, as financial institutions would try to arbitrage any differentials between the two markets, thereby accidentally infecting the real market with retail market's influence. In the end, the result is the same. Normal people will continue to have a seat at the table, whether the elites want to or not. Secondly, this tactic will start being used for political gain. Rest assured that political activists across the political spectrum are taking notes. Until now, none of them have truly seen the world of high finance as a political battleground. Now they will. Furthermore, if people ever start receiving a universal basic income, or a UBI for short, you can rest assured that it will eventually be weaponized like the stimulus checks were if the people end up being unhappy with government policy. Thirdly, larger organizations will try to begin to control these memes and use them for profit or gain. Most major world powers already have propaganda divisions with paid shills and bots, so it would hardly be a change of pace. Corporations will also join the fray. Financial institutions will, for obvious reasons, want to have the ability to affect in which direction stocks move, and if they can manipulate the stock in an untraceable, anonymous way, so much the better. Less obvious are the companies themselves. Often corporations get loans proportional to their market capitalization, so being able to meme the price upwards might be a final Hail Mary in order to save a business. Besides that, high-level executives of these companies have their bonuses tied to the stock price, meaning that they have several million-dollar reasons to affect the value of the stocks. Traditionally, this means that they take short-term decisions that will positively affect the price in the short term at the risk of the long-term profitability of the business model. One legal way in which executives affect prices is by announcing stock buybacks, which is essentially when a company buys their own stock to reduce the amount outstanding and thereby increase the price. Conclusion. In regards to the GameStop situation, perhaps by the time this video comes out, this particular scenario will have been de-escalated. Or More worryingly, the infinite loss potential of the shorts will have created a scenario wherein, to try to meet their obligations, the hedge funds start dumping everything they own at whatever prices they get. This would cause a market panic, wherein other institutions begin to race to offload their own assets. At that point, it's like people stampeding towards the exit when a building is on fire. Madness. Meanwhile, the other financial institutions that provided the shorts to begin with start to wheel and deal with the expectation that they'll have the revenue coming from the short. They never get it, but by that point, they have various other obligations that they can't meet, which triggers a domino effect that destroys an already pandemic-weakened economy. And, to top it all off, the billions of dollars that had been printed over the last decade through quantitative easing have no home left in the world of high finance and come crashing down into the normal economy that you and I live, causing inflation and possibly even hyperinflation. That is a nightmarish scenario. I hope it's not a likely one, but there are too many moving pieces for me to know to be sure. What I can say for sure, though, is that for good or ill, this is the beginning of a new era. The age where individuals have the power to collapse the economy at will is upon us, and it'll be interesting to see the balance of powers that emerges in this new ecosystem. Thank you, and I'll see you next week.
There once was a stock that put to sea. The name of the stock was GME. The price blew up and the shorts dipped down. Hold my bully boys, hold. Soon may the tendy man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go.